Westpac have just released their price predictions for housing market over the next couple of years, and we might be on the cusp of a new property boom. How can that be? Like, aren't all these fixed rate mortgages coming into variable, people having to like sell their houses? Isn't like mortgage arrears going through the roof, people having to sell their properties because they can't afford them? Didn't interest rates just go up a lot and maybe they're gonna go up more? Like, how can the property market boom in this kind of environment? Isn't inflation still an issue? Cost of living going up? Where's all this money coming from? Well, I'll share with you 8 charts to answer each of those questions, and I'll also be doing a little bit of a deep dive on the Brisbane and Perth property market. It's going to be a really cool episode. Stick with me. Here we go. My name's PK and I help people build passive income through Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. In this channel, we talk about economy, property, and financial happiness. Hit the subscribe button, hit the like button, give the notification bell a bang, and let's go. So Westpac, obviously, I would say like the poor cousin to CBA in Australia, nonetheless, Big Four bank, who come out with their property predictions, property price growth predictions, and here they are. So dwelling price forecast. So if I just hover over 2023 forecast, okay, so that's where we're in at the moment, they reckon Sydney's going to go up 10%, Melbourne 4%, Brisbane 6%, Perth 8%, there you go, and overall Australia 7%. Sorry for those that have not made the cut in this chart. So basically, property market's going up, like there's no doubt about it, and long-term average is about 6 to 8%, so Melbourne's still really underperforming, thanks Dan Andrews for that. Perth outperforming, Sydney outperforming, overall Australia back to averages. But let's see what happens in the next year according to them, which I don't really agree with, and I'll get through the reasons why over the next few charts. 2024, so next year they reckon Sydney continues to go up, Melbourne goes up a little bit more, Brisbane a little bit more, Perth steam engine right through the next few years, huge growth, biggest growth area in 2024 is Perth, and overall Australia dips down to under 4%. And of course, keep in mind, there's markets within the market. In that Sydney, 6%, there'll be suburbs that actually fall. There'll be suburbs that go up by 15%. Same in Perth. There'll be suburbs that fall. There'll be suburbs that go up by 10, 15, 20%. Okay, but this is just overall. And then 2025, which is really interesting, they're really only predicting Perth to be like the only decent performer. Guys, what have I been saying? Not to toot my own horn or anything, but for like the last 2.5 years, what have I been harping on about? You can go back and watch those videos yourself. Well done to those who bought in Perth when everyone thought it was a boom bust town. And by the way, iron ore prices already halved over the last 2 years. The mining boom is not really with us anymore, and property prices in Perth still going up. Diversified economy, check. But wait, PK. There is still a chance that inflation is not under control, and therefore interest rates could go up from 4.1% to 5.1% to 6.1%. If that happens, then all your predictions are out the window, mate. And like, yeah, good luck to your YouTube channel. Well, check this out. Australian house prices have consistently climbed over long periods, doubling 7 times in 6 decades. Whether interest rates have risen, fallen, or stayed flat. Now, this is just Sydney and Melbourne, but they're a proxy, and they're actually true for the entire Australian national property market. The pink chart is Sydney and Melbourne property prices, which are reflective of all of Australia, really, if you actually look at the underlying data, and the standard variable owner-occupier mortgage rate. Okay, so you see when interest rates go up in the blue here, hey, property prices grow. When interest rates come down, hey, property prices grow. So what does that tell us? In fact, what's really interesting is that interest rates are going up. You can see the gradient from kind of this point to this point is slightly more steeper than the gradient from this point to this point, which means that counterintuitively, when interest rates are growing, that is when property prices are outperforming the most. That kind of baffles your head, and I've done deep dives in this actually even before the interest rate cycle began in May 2022. Back in 2021, early 2022, I was sharing charts like this, and I was saying, guys, don't be put off. You will make so much money over the next 1 or 2 years. And those of you who have listened obviously have made a ton of capital growth, not so much in Sydney or Melbourne, of course, but that's the answer to you bears out there. Hey, what if interest rates continue to go up? Well, there you go. The pink line continues to do what the pink line does best. But wait a second, like, how can like, wait a second, property price already boomed. Like, they're so high. How on earth can people afford to continue buying properties? Right? It just boggles my mind, right? That's what you're asking me. Check it out. This is by AMP and ABS, Australian Accumulated Household Savings. So before the pandemic, okay, they accumulated household savings back in March 20 were like down here. This is in the billions, so let's say, I don't know, 10 billion, 5 billion, whatever it is, right? And as the COVID came through and stimulus, both fiscal and monetary stimulus, got injected into the system globally and also nationally here in Australia, this household accumulated savings went through the roof, not just in terms of ratio, but just cold hard dollars, like under your mattress, so to speak, really, in banks. You know what I mean? So it just went up and up and up and up because people didn't have anything to spend it on. They were just locked at home and many other reasons. Of course, interest rate rises and fiscal contractionary policy has meant that these household savings have come down. And I know this chart is a little bit dated. It's back in March and it's been like almost 5 months since that time. But this hasn't come down below 200 billion. It's not come down below 150 billion as of yet. And so compared to pre-COVID times, we are still in booming savings environment. So I know that a bunch of you guys are probably doing it tough, right, in your local ecosystems, local communities, but on an aggregate national level, which is really what drives national property prices, people have got a ton of money, and that's why the property market is continuing to do well and will continue to do well over the next 1, 2, 3 years. I'm much more actually bullish on some parts of the property market, not so much Sydney or Melbourne, but especially like Brisbane and Perth, and actually some parts of Tasmania now as well, just quietly, than the official Westpac forecasts. And one reason is this: distressed listings, okay, as a percentage of total listings. Okay, so if there's 100 properties that have just come for sale, how many of them, what percentage of them have come for sale because the person or household couldn't afford their mortgage? Because, you know, household interest rates have increased a lot. So some people can't afford it anymore. And that was definitely the case between sort of, you could say, April to sort of October 2022. And that's really where we saw the rug being pulled out from underneath the Sydney and Melbourne property market. But since that kind of peak of October, this is very interesting, like, nerd out with me here for a sec. These listings that are due to distressed sales, this is domain data, these have actually trended down, okay? And you might ask, well, doesn't make sense because interest rates have continued to go up. How can these distressed listings continue to come down for like more than a 6-7 month period now? This is consistent. And the reason is multifold. One is that unemployment remains at a record low and wages have increased somewhat. That's one thing. Another thing is banks, they don't want to let people fail in their property repayments. 50% of Australia's wealth is comprised in real estate. That means that if real estate goes bust, this nation goes bust. Banks are the pillar of this economy, and they are allowing people to stretch their mortgage terms, be lenient on their mortgage terms, be lenient on their repayments when people are distressed. So actually banks are being good guys for a change. That is meaning that distressed sales are not commonplace. In fact, they're trending down, 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 down. And now one of the reasons I'm more bullish over the medium term, 2, 3, 4 years than Westpac is because net immigration is on the rise again. Everyone knows this. I won't labor this point, right? This red line, it's actually at record high levels. It's even more than around the sort of 2007, 8, 9, 10, 11, 12 mark when there was a huge mining boom going on in Australia. Visa and immigration laws were very lax and a lot of New Zealanders, etc., were coming into Australia. Right now we have even more than that. And with the Labor government polling pretty well and their policy, hardcore immigration, it's hard to see how this immigration will stop, and therefore property prices will continue to increase due to just cold, hard demand over the next 2 to 4 years. Now let's deep dive into some areas like Brisbane, Perth, and a few Sydney areas for a few minutes now. This is total property listings, okay? So this is what Brisbane is showing, and this is how we can predict what property markets will do. Listings are a key leading indicator of price movement. And what you've seen is that since 2022, listings have increased in Brisbane, right? From here up to here. And that is when Brisbane actually fell in value. But since kind of late 2022, start of 2023, listings have come down again, and therefore supply has been taken out of the market. If demand didn't even increase, which it has for various reasons I've just mentioned, even if it was just flat, that means property prices increase. And I just done a video like a few weeks ago on the next growth cycle of Brisbane, showing using data, not my opinion, because that doesn't matter, why I think Brisbane could be at the start of its growth cycle. So we just want to monitor that for everyone who wants to invest in Brisbane. Now, with the spring season coming up and summer coming up, that's generally when more listings come online on real estate and domain. So we need to monitor this and see, okay, if a lot of new listings do come online and we see this sort of gradient again, is there enough depth in the market in terms of demand for that demand to absorb that additional supply and prices continue to go up? Or could it flatten out? That's to be seen. But one thing's for sure, and that's that Perth property prices will continue to go up. And the reason I'm so bullish on that, I have no agenda in Perth, by the way. I don't sell any properties. You can feel free to buy wherever you want. But I'm just sharing data as I know it. WA population growth is the highest across any other state. And you might be scratching your head like, hang on a second, I thought most migrants came to Sydney or Melbourne because that's the big cities, right? Well, they are big cities, but you drop a rock into a lake and it barely makes a splash or any impact. You drop that same rock, even a slightly smaller rock, into a bathtub, and all of a sudden you have a ripple effect, and you can see it. And that's really the impact of immigration and how it affects property markets. A lot of immigration into a huge place like Sydney has an impact for sure, but even slightly less immigration into a smaller place like Perth, that is like the bathtub. It has a much bigger impact relatively. And property markets, housing markets move not because you and I want them to move, not because of absolute changes, but because of relative changes. That is what's key, and that is what's driving Perth ahead. New Zealanders, British immigrants, Koreans, Indians, etc., a lot of them are just flocking to WA, and properties are going up due to owner-occupiers, not investors. It's very important. Investor activity in WA, especially Perth, is actually much lower than New South Wales and other places. It's owner-occupiers that are boosting Perth prices, and that means that it's more likely to be a boom than a bubble, because when investors drive a property boom, it becomes a bubble. That's not the case in Perth right now. And then lastly, what about Sydney and Melbourne? These are the areas where growth is actually slowing down, somewhat paradoxically, versus what Westpac is saying. A lot of listings I was just talking about are actually increasing in some parts of Sydney and Melbourne, therefore creating a drag, a sort of open parachute effect on price growth. And this is what I was saying for so long. Those investors who buy in Sydney, Melbourne, they don't realize just how much it takes to hold those properties, especially if they're costing $15,000, $20,000, $25,000 every single year, negatively geared to hold, which on average they do. And therefore it's these same investors who didn't listen to content like this who are now selling and causing a drag on these particular areas. So inner Melbourne, Sydney City, and inner South, these are the areas where investors as a proportion of new listings has gone up big time versus the 5-year average. And in June 2023, Sydney, Parramatta, okay, it's a favorite hunting ground of those who don't know how to invest properly. Eastern suburbs, Sydney, North Sydney, and Hornsby, inner west, Perth, inner city. There you go, Subiaco. I just saw on the Elephant in the Room podcast, and they were arguing with me about how Subiaco is better than Rockingham. And I was like, hang on a second, Rockingham's gone up more than 60%, Subiaco's gone up 30% and is falling right now. Here's the reason why, okay? Places like inner Perth, not great. So I'm not biased to any city. I'm biased to particular suburbs that show good data. Ryde in Sydney, even Brisbane, inner Sydney southwest, okay, so even more affordable parts of Sydney like Liverpool, Campbelltown, etc., those are kind of feeling the heat in pockets as well. Perth southeast, there you go, Melbourne west, Sydney inner. So investors who made poor decisions based on cash flow over the last few years are now putting their properties back on sale. You've been watching this channel for a number of years, hopefully that wasn't you. So that was a bit of around the grounds, okay? So all you property bears, hopefully I'm kind of with love and respect addressing your fears or your challenges, using data. I genuinely think that Westpac are probably on the right mark in the next 1 or 2 years, but I'm more bullish on them over the next 3 or 4 years. How can property markets continue to go up? We've answered that, and we'll continue to bring multi-dimensional data to carry on answering that, to improve your conviction that real estate is and could and should be your primary vehicle to financial independence, and so you can get an early retirement. My name's PK. Hit the subscribe button, turn the notification bell on, and always remember, the best investment is not in real estate. The best investment is actually in yourself. To level up, I'll leave links below to my podcast, Oz Property Mastery with PK, on Google, Spotify, and iTunes, and also my Facebook group with almost 40,000 people now. Amazing investors, many much more successful than me. Australian Property Mastery with PK, and links below. Please join and really level up, and then you can retire early. And you'll wonder, I'm sitting here 50 years old, I have no one to hang out with, everyone's still at work, what am I meant to do? That's first world problems. Catch you later, guys. Bye.